What's up, YouTube? Welcome back to the channel. Today we're going to keep it short and simple. I've been getting a lot of requests from people just asking in general how to take an option trade on your cell phone. So here I'm going to simply just demonstrate step by step how to place an option call or how to place an option put. Also, we will talk about your expiration dates and then the pricing of options. From there, we will also talk about how you would know how much you would make from each option. Therefore, you don't get into any bad theta type of options where you get low type of income back. But before we continue, please make sure you give this video a thumbs up, especially if it helped you in any type of way with your trading. Comment down below any type of questions you guys have about trading, and I'll make sure to reply to you as soon as possible. Also, feel free to join our Discord community down low. It is completely free, but to get the analyzer's daily signals, there is a premium fee for that. But that comes with a lot of knowledge, and it comes with a lot of great signals for you to learn from and profit from at the end of the day. So feel free to join that if that's something you're interested in. And last but not least, if you're new to the channel, make sure you subscribe so you don't miss out on any type of stock market content. And this is a channel where we grow our knowledge and become more profitable in the market day by day. So without further ado, let's get right to it. So first, I'm going to demonstrate here on the Robinhood app, right? So Robinhood is the broker for this type of account. The first thing you want to do is go to your search bar, right? Once you go to your search bar, you're going to type in the type of stock that you want to trade. So for example, I'm going to start off with a pretty cheap stock. So let's type in DraftKings. If you guys don't know who DraftKings are, they are a sports book and is where people place their bets when it comes to sports and different events, right? And right now, they are at a total of $13.08. So if I wanted to play an option for this trade, I would simply look at the bottom right and I would click on this trade button. Once I click on that, it's going to give me two options, whether to buy shares of this company or to trade options of this company, right? So we're looking to trade options. So from here, I'm going to click trade options. From here, we're taken to an overall homepage for this option, kind of just breaking down what each type of option you could take, right? But first, I want to focus up top here, right? I'm going to demonstrate basically what all this is saying live for you guys. So up top, we have our dates. So July 15th is this Friday, July 22nd is on Monday, and July 29th is on Wednesday. So these options give me about a 2-day spread between each option I decide to take. One thing to know about the dates is the further out you go, the more expensive your options are going to be, just because you have a lot more time for your prediction to happen, right? So let's go with July 15th, which is Monday. So once we click on that date at the top, we have 4 options. We have buy, we have sell, we have call, and we have put. Think of these as a pair, right? So don't think of these as 4. Think of these as 2 groups of 2, right? So we have buy and sell, and we have call and put. Buy just simply means if you want to buy an option. Sell just simply means if you want to get rid of your option, aka sell your option. Right? So whenever I'm looking to buy an option, I want to make sure my tab is on buy. And whenever I'm looking to get out of my option, I'm looking to move the tab to sell. These next 2 columns right here, we have call and we have put. Every time I think the market is going to go up from its current price, I'm going to make sure this is on the call option. Every time I think the market is going to go down from the current price, I'm going to click on this put option. So in this example, we're going to stick with the call option. I want to predict this market is going to go up by July 15th. Also, guys, your contract becomes worthless if you don't get rid of it by the expiration date, right? So that means if you're down 20 bucks out of a $50 contract, but you decide to hold it, your contract would go worthless, right? So you always want to make sure you sell before that end date. Usually I like to sell if I'm down 20, 30%, right? That's just my personal guidelines. So in this situation, we're saying the market is going to go up. So we have it on call, and we're going to say it's going to go up by July 15th. So from here, we're given a list of different contracts. Think of this gray line in the middle as a divider line, right? So this is letting me know my share price is at $13.08. So that's where the current market is. Everything below my share price is considered in the money. In the money simply means that the overall stock market price has passed these overall strike prices, right? And what these strike prices are these bolded white numbers at the top right of the contract. And the strike price lets me know that this contract is saying that by July 15th, this overall market will be above $13. The higher up it goes, the more money you make. The lower it goes, the more money you lose. But all in all, everything at the bottom below this share price line is considered in the money because $13.08 already passed $13, already passed $12.50, already passed $12, right? So these are considered to be more expensive due to that reason. Just because you're buying while your contract is already in an advantage. Everything above this gray line is considered out the money. Out the money simply means that this overall share price of $13.08 have not passed these areas yet. It has not passed a strike price of $13.50, $14 or $14.50. Right? But we got to remember this is a July 15th date. Today is currently the 11th. So we have plenty of time for this share price to become in the money with these strike prices, especially if the market has a nice momentum going up. So as we see here, these prices are a lot cheaper due to the risk of your overall share price not touching these areas by the time this day comes. So let's say that I think that this market will go up from $13.08 from July 15th. And right now, I want to stick with something that's closest to me, that's closest in the money to my overall share price, and that's this $13 call. So now let's say that I want to buy a contract, right? So I see now that this $13 call strike price is the closest one to the overall price, right? So I want to click on that just with this example. And I like to think of this as the signing of the contract. The first thing it asks me is, how many contracts do you want to buy, right? So in this example, we're going to put one. The next question is your limit price. I don't really like to think about the limit price. It already has that filled out for me. But this is basically telling me that each share to rent out until the 15th of July is going to cost 70 cents, right? And remember, guys, with options, you are buying 100 shares minimum, right? Depending per contract, it's 100 shares, right? Until this 15th, right? We are renting. We aren't buying. If you want to buy a company, you buy shares of it. With options, we're renting. We're gaining the same credibility as somebody who owns 100 shares of the company, but just for a certain amount of time. So with this being 70 cents a share, and this being 100 shares in total, the overall price will be $70 for this option contract. Down low, you see the max profit is unlimited. You see the break even is $13.70. And you see the most that you could lose in this option is $70, right? So if this dropped all the way down to zero, the most I would lose is $70. And usually with option profits, every time a market goes anywhere up $1 to $2, and especially with an in the money contract, you will gain anywhere from 100 to 200 bucks just off of that contract, and just depending on the market as well, right? So that's why the max profit is unlimited. If this was to shoot up from $13 to 200 bucks, you would have made a couple thousand just like that. So it's that simple, guys. Now let's say I wanted to buy more than one contract, which is just meaning that every time it goes up, the profits multiplied by however amount of contracts you buy. So for this example, let's say I want to buy two, it will multiply by two. Every time the market goes the opposite of what I predicted, I would lose money times two, right? So just depending on whatever you're comfortable putting your options to, that's the number you will put, right? But as you see now, the price is 140 because I'm buying two contracts and each one is 70 bucks. So once I'm ready to go and continue, I click review, right? So this is kind of like the receipt right here. This is saying, okay, you're buying two options, 70 cents a share to rent out, and you're getting 200 of those shares, which will be a total of $140. From there, you swipe up to submit, and then you'll be in your option. That's simple, guys. That easy. I'm obviously not going to get into this trade. For one, I can't because it's after market. The market is closed. And then for two, I wouldn't just blindly trade like that. That's what we call gambling. Now, let's say I wanted to predict that the market was going to go down. I just do the same thing with put now, right? I want to buy a put, and I'm just predicting that this market, which is at $13.08, will drop lower than $13 by July 15th, right? So I do the same thing. I click the plus, right? Put how many contracts I want to buy, 61 cents a share to rent out until the 15th. So times that by 100, your overall price is $61, right? Your max profit is $1,200. That's if this dropped all the way to zero. And your max loss would only be $61. From there, you click review. Same thing, you swipe up, and now you're in your contract. Now, let's say once I'm in my contract and I want to get out of it, now I go to this sell option, right? So before it was on buy, but now I want to get out of it. And now I click sell. I will go back to whatever strike price I bought, which is that $13. And let's say it was a put that I had bought. I would click on the plus. I would sell the contract, click review, swipe up, and I would be out that contract just like that, right? So it's really that simple, ladies and gentlemen. Comment down below if you guys have any more questions. Like I said, join the Discord community. You will learn all about this type of stuff every single day. And if you want to join in with the signals and get live plays and live trades to get into by some of the top analyzers when it comes to the stock market, you can also join the premium of that Discord as well. Right, but if you learned something from this video, make sure you give this video a thumbs up, show the page some love, get this channel out there. Comment down below any type of questions you guys have. Like I said earlier, I'm here to help. I want to make sure everybody here is eating. The stock market could be stressful, but it's also a wonderful thing if you really know what you're doing. So I want to make sure that we're all feeling like that. And last but not least, if you want to keep up with the consistent content with the stock market and learn here on this channel, make sure you subscribe to the channel just to keep up with the everyday knowledge that we drop here with the stock market. Like I said, guys, stuff we talk about here on this channel is what people charge you in courses for, right? So I want to make sure we're all eating, and I want to make sure we're all doing good without having to break pockets to learn something. The stock market is stressful, as we know already. So with all that being said, guys, I hope you guys continue to kill it in the market if you have been. I look forward to hearing from you guys in that Discord. If you decide to join that community, we would be very ecstatic to have you. And with all that being said, guys, peace.